Thank you. Ooh, how are we? My name's Cobb, as you now know. And yeah, I'm the founder of TraderCobb.com, and we educate traders all over the world. We also have a media side as well, where I get to interview some people in the space to learn a lot more about it, and I broadcast that to you if you want to watch it and listen to it, basically. It's been a pretty amazing journey for us. I've been trading for 12 years, and I'll take you through the whole thing. I've been in markets since I was 16 years old. Dad helped me with my first share purchase, which was wonderful when it was up from 8 cents to 88 cents. You know, at school I was basically the rich kid because I actually had some money that was mine. And then subsequently that company went bankrupt. That wasn't so much fun. I kept that quiet. But what it taught me was risk management and how important it is. So all of my trading principles are taught and factor around managing risk first and foremost. Because at the end of the day, the truth of the matter is that, am I too loud here, am I? Oh yeah, right, I've got to click across. There you go. Yeah, so trading is risk management. It's that simple, all right? If you can keep your money, we've got half a chance of making some. Don't focus on making money, because if you do, you probably won't. It's really important to focus on the risk side of it. So, here's my wonderful risk disclaimer. That was a pretty good segue, I thought. Pretty much stating this is for educational purposes only. Please read this because it is important. I don't do tips. If you walk away from here and you learn something, well, then you've listened. So well done. No, it's not too bad. The lawyers looked after us there. They tried. They really did. But we won that battle. So I want to start off by just introducing you to some of the people in this space, because I know for a lot of you, you might be looking at this and thinking, well, maybe not you guys, but there's a lot of people that look at this space and they go, what's this funny internet money? Because all they think about is Bitcoin. Now, I'll tell you a story about Sheila Warren. I went to Consensus in New York, which is a big crypto asset event. In May, I think it was. We booked the flight a week before the event. We had no plans of going. Just decided I would. Spent 9 days in New York. I was jet lagged, as you can imagine. Right, it's a long flight. New York, you've got to fly to LA, then you've got a 2-hour stopover, then 6 hours to New York. Doesn't matter where you sit. It's a long time and it's tiring. Anyway, so I'm at the Consensus event. So not Consensus. There was one before. Anyway, the Ethereal event. And on stage, before I was about to, or before the doors were about to fling open, was the biggest guest of the day. Now, I had 13 minutes to interview Sheila, and I'd never done a face-to-face interview. I could see the clock ticking down, and they're like, we're going to do a press conference right here as soon as that finishes. So there's people everywhere, cameras everywhere, and I was thinking, like, Sheila Warren of the World Economic Forum, what a powerful and inspirational woman. I got to speak to her. Now, I don't try and credit myself as being the smartest person in the room. I'm good at what I'm good at, and everything else, I'm mediocre at best. But we struggled and we got through it, and she helped me with that, and that was really the start of the interviewing and the show that I'm now doing, and all across YouTube and all the social channels. But, she's here for a reason. Very, very smart, influential woman. This is not internet money. This is blockchain, the technology that's going to revolutionize businesses and the way that we transact together. It's a truly impressive technology that we need to learn more about. Speaking of learning more about it, we'll talk about York. So York is an interesting fellow. He's the global business strategist for blockchain at Microsoft. Probably understand who Microsoft is, needs no introduction. And the fascinating thing about York is that he was at Microsoft early days and then left about 2000. You remember Microsoft went through a bit of a quiet period for 10 years, didn't do anything, really? Sorry if you work with Microsoft. Kind of went quiet, didn't it? Well, he wasn't there for that space. He went from what he was doing at Microsoft into Wi-Fi technology because he saw that that was the next big thing. And was he right? Yes, he was right. So he started .com, went to Microsoft, then went into Wi-Fi, tick, 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 bang on trend for everything, and an early adopter of all of this. Guess where he's at now? Back at Microsoft, but for blockchain. The guy's got a 100% success rate with being one of the first into emerging markets. That should give you a bit of confidence too. Trace Meyer, I interviewed him as well whilst I was in New York. He's a pretty interesting character as well. This man makes $100 million bets in Bitcoin because he's got so much. So very interesting person, early adopter in the space, was telling his Twitter followers back at $25 to invest part of their portfolio into Bitcoin. It's safe to say he doesn't buy a drink anywhere in the world and has lots of friends. He's made a lot of people a lot of money. So again, this is sort of more of a speculator, but in the space, very early adopter of it and an understander of the technology very, very early on. Stephen Chu was a good guest as well, one of the co-creators of Ethereum. Ethereum is the second biggest market cap token on the planet right now, with about 25 billion market cap. Got up to about 140 billion at its peak. Peaked at $1,400, now down at around 220-ish. If I'm correct on today's prices. Again, a very intelligent human being, all right? Kavita Gupta of the Consensus Group, with a Y, not consensus, consensus, I think is the proper pronunciation. She's a powerhouse, absolutely wonderful. We met her in New York. I only got to interview her a couple of months ago, but she chairs and runs one of the funds for the Consensus Group, which is backed by my next guest, Joe Lubin, the co-creator of Ethereum. Now, Joe's wealth is reported between $5 and $8 billion, depending on whether it's a Monday or Tuesday. And, he doesn't need to work. He doesn't need to do anything. He's here to change the world and create this innovative technology and bring it to the masses. I had the absolute pleasure of interviewing him just a couple of weeks ago before I went to Dubai. And I'm not sure, but I think I got the first interview in Australia. Stoked. So yeah, again, this is just to build out some credibility about the space. If you are considering or questioning what this is, don't worry. Dig deeper, dive deeper into the wormhole and work out what's actually going on, because there's a reason why these intelligent human beings are here, okay? If you don't know what that reason is, go and find it. But I'm going to talk to you about trading, because that's what I do. I've been trading for the last 12 years. Consistently anyway, on and off beforehand, but I would call myself a trader for 12 years. I lived and worked in London, travelled all over the world, trading, educating, speaking, commentating, you name it. I love it, I enjoy it, and it's beautiful because it fits around whatever lifestyle you've got. So I don't trade as often now, simply because I trade the higher time frames. I don't want to stare at 6 screens all day long, because it makes my eyes sore. I got other things to do. I did that. I ran a fund in London, a small fund for a family there. I didn't really enjoy the fund management side of it. I don't sweat it if I have a drawdown, because every trader does. But it really affected me if I had a drawdown on someone else's money, because I bring on board, like, what are they going through? Like, how are they feeling? Whereas I should be non-emotional like I am in my own trading and just get on with it. But I struggle with that. I absorb people's feelings around me, which is it's a bad thing. But I found it really hard. I know a lot of my mates that are in the hedge fund game, they say, how can you trade your own money? I'm like, how can you trade somebody else's? It's a total polar opposite. So we're going to look at how to make consistent profits in trading in this event. So again, I've been trading 12 years, FX, bonds, current commodities, you name it. I didn't really care, as long as it moved. Volatility is what I chase, and that's why I'm in crypto. Had a small fund at the age of 23, always traded trends. And the trading strategies that I've employed over years of experience in traditional markets, they work in crypto as well, because I'm a technical trader. I read charts, okay? I'm the hocus pocus guy. I read charts, and I do it consistently and make profit doing that. So for me, it's not about, half the things I trade, I don't even know what they do. I don't care. I'm very focused on what I'm looking for, and I've got a written checklist. I'll introduce you to some of that stuff. So travel around the world, doing all sorts of things. Was introduced to Bitcoin in 2013 and said, this is rubbish. Because I'm not a tech VC. Well, I wasn't then. And I wasn't interested in that space. I was looking for volume, I was looking for tools to trade it on, and I was looking for places to get leverage. I couldn't get any of those things back in 2013. So I kicked it to the curb, and I have people say, aren't you kicking yourself that you did that? And the answer is no, because I would have broken my rules. And if I had broken my rules, I probably wouldn't be here. Because you've got to be disciplined as a trader, or learn to be disciplined anyway. Got into it last year properly in July. And I got the phone call from a mentor of mine, and he said, Cobb, you've got to have a look at this crypto stuff. I'm like, whoa, come on, man. Really? It's just look. So you get the right call from the right person, and you go, okay, well, this person's telling me to do this. I respect this person. I'm going to do it. And I was pleasantly surprised because the market was around about 2,000 and something at that stage, something around that figure. So I looked at it and I'm like, there's charting of software. My strategies, I looked back in time and said, hey, that all works fine. That works good. I can get leverage. All right, look at the volatility. Tick, 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 tick. Started buying some crypto assets, then started trading it again. Started buying about July last year. Started trading it actively, I think, towards the middle to end of August, and did, that run through December. It was a wonderful time. And yeah, I got out because I know what to look for. It was really obvious for someone who knows what they're looking for. It's, we were talking to some of the guys in here before about, and a lot of people were saying, no, it's different this time. It's never different this time. It's always the same. Markets go up and markets go down. It never goes up forever. That's called a con artist. That's just not how things work. So I'm going to teach you a few things about how this actually looks and what you can do. So why crypto? Put it simply, volatility, guys. You will not find volatility like this in any other market anywhere in the world right now, full stop. As a trader, I want volatility. It makes me money. It's you're seeing regular 10% moves. Now, it's consolidated a little bit more across the top 10 in the last sort of month or two, but, we're still seeing massive moves. Bitcoin cashed at 32% this week already. 32%, I said, this week already, with something with the market cap into tens of billions of dollars. I mean, 32%. Kidding me? You get a trade with a little bit of risk like this, your reward upside is absolutely massive. We'll get to that in a minute. So again, let's look at the pros and cons of this space. Pros, volatility, big moves in a short time. You get good moves in the stock market, you just got to wait a while and then wait a little bit longer. Huge profits over small periods, that also comes with risk. But if you focus on managing the risk, you manage the risk, and the profits, well, they look after themselves for the most part. You do need to scale out. There are things that you need to do. You don't just buy and hold on forever. That's silly. That's called investing. Trading, you've got to have a structured plan on how to get in and how to get out. You might get out a little bit here, a little bit here, a little bit there, and let the last bit run. Have a crack. See if it does take off. But again, it's structure and strategy. 10% moves constantly. Now, outside of the top 20 tokens, coins, whatever you want to call them, there can be hard to find options to short. So shorting is when the market falls, all right? You can make money when the market falls and when it goes up. So get your head around that one. People get caught up in that minor detail. Up and down, you don't question that. Same in trading. You either try it when it goes up or trade it when it goes down. Don't go beyond that. So if I could trade, I would just simply love to be able to trade everything and short everything, because, geesh, it would just be so easy. It would be so easy. Because you look at the fundamentals of the project, then you look at the technicals, and you just go, well, I'm going to short that as heavy as I possibly can, because it's going to go down. But we haven't got access to everything. Charting's okay, it's not amazing. I'm used to really good charting packages and programs that allow me to be very, very efficient. They don't exist yet, but they're coming. I mean, this is we're early adopters of the new technology. So it's coming, but with that opportunity comes, right? So with that frustration, the opportunity is the volatility. I wouldn't trade one for the other, because if I would, I'd still be doing FX, commodities, and stocks, right? It's not as easy to navigate the entire space, although it is getting a lot easier now. There's a lot of programs and things coming into the space, a lot more education to get you into it and to get you out of it safely. All right, so it's not that complicated. Again, we all learnt to walk, right? You rode a bike at one stage, you fell off that too. You just got to know what you're doing and take your time. You don't make good decisions when you're in a rush, and you don't make good decisions when you're emotional. So don't do either of those two things, and you'll probably be all right. So this market is the best market in the world for trading, even though it's not the easiest for trading. So how do I try to use technical analysis? I base it all around that. But I'll tell you once, I'll tell you twice, you can have my strategies. You can follow those strategies. You can use those strategies, but it doesn't mean you're going to get the same results. You might get better results. I've got people in my community that are out trading me. Good. I'm not competitive in that space. I don't care. For me, it's about sharing the knowledge and doing my thing. It's never been about a competition. Your biggest competition is going to be your own mind. Just because you've got the strategies doesn't mean that you're going to execute them flawlessly every single time. So if I'm not feeling well, I won't trade that day. It really is that simple, because you look at the chart, I've got a literal checklist where you tick things off. You really, like your shopping list. You walk into Coles and you've got a list. You walk out with what you bought on that list. You go into Coles hungry with no list. You come out with a bunch of crap and you forget everything when you get home and you go, whoops, I forgot to get the cat food. I forgot to get nappies. I forgot, you stuff it all up because you didn't have a plan. Same with trading. You need to have a structured approach, and a structured approach to how you personally. In my courses, I talk a lot about Eckhart Tolle. Anyone a fan of Eckhart? No? The Power of Now? Oh man, there you go. There's a freebie. Get on that. Eckhart Tolle, Tolle. It's really, really good if you're a trader. It's hard to listen to. It's hard to read. It is. But it helps you to understand that you need to be cool and calm. If you don't, if you come to markets flustered, it's not going to be good. All right, so you've got to find something that allows you to be the same every single time. And it's really important because that's the mindset that you've got to have. So the path to successful trading, well, you've got to learn to trade first. There is no shortcuts. There just isn't. There's no get-rich-quick scheme. As much as this market does have extreme volatility, you do need to learn to trade first. Strategies alone are not the key to your success. It's like any business. You've got to have a holistic approach to the way that you come into this marketplace, and structured approach as well. There are no secrets to trading at all. It's just about finding something that works for you, really. So why does technical analysis actually work? Well, it's basically emotion. I mean, this is a guy called Jesse Livermore. He wrote Reminiscence of a Stock Operator back in, I think it was 1916 or something like that, about 100 years ago. Now, he quotes this: "I absolutely believe that price movement patterns are being repeated. They are reoccurring patterns that repeat over and over. This is because the stocks are being driven by humans, and human nature never changes. It's just as true today as it was 100 years ago." Even your trading algorithms, who writes them? At the moment, humans. Maybe when AI comes in a big way, we'll probably see the markets change again, and we'll need to adapt to that at that stage. I'm hoping I'll be gone and done by then. Retirement. But right now we have human beings still in the market, and that gives us patterns. And patterns repeat themselves and provide us with opportunities. Now, there are different types of technical analysis tools. You've got your price itself, which are the candlesticks, and I'll talk to you about that. Actually, a little middle skew. There we go. Can you see my mouse cursor? Yeah, you can see that, right? So see this big green thing here? Actually, though, I'll use a better example. I'll use this one. That's green. That means it closed higher than where it opened. A green candle closed higher than where it opened. The uppermost point of that, like the wick part, is the highest the price traded in that period of time. And the lower point is the lowest period, or the lowest price, it traded in that time. Now, that's an awful lot of information if you consider what that actually is, because what that is, it's price measured by time. Now, as simple as that sounds, it's incredibly powerful, because it shows you where price has been in a set number of time. Now, this is a daily chart, because I remember this because that was a trade I took back there, and this is a Bitcoin chart. I remember it very well. We'd just come off at 3,000, and that was the first pullback for a cradle trade, and obviously it did do well, but that's not the point. The candlestick itself can give you a lot of information. Then you've got the things that cause issues, the oscillators and indicators. People put too much time and value and thought into indicators. I'll tell you one thing that I do not ever do. I never trade based on an indicator. I will leave a trade based on an indicator, but an indicator will never tell me to buy or sell. And it's because an indicator is an indication of what might happen. Just the same as you're driving down the highway. Someone's coming, or the car in front of you's got their right indicator on. The cars are going 110 this way, you're going 110 that way. Are you panicked thinking you're going to see this car crash and have a head on? No, you're not. You're going, the guy left his indicator on. It's not called an absoluta. It's an indication of what might occur. Now, the other thing of this is that they're all derived from price. So they lag price. Price happens first. Every indicator on the planet is written based off price. So that would suggest that price action should be your king or queen. It's the most powerful tool you can have. And if someone said to me, Craig, you can have all the indicators in the world that you wish to have, but no price action, or price by itself, I take price by itself. because you get cyclicity, you get actual information you can read that is factual. It's price measured by time. And in trading, it's a war between buyers and sellers. That's all it is. You've got 3 things that you can do. 2 are active, 1 is passive. Bring it back to the core of what is actually going on. A market has a buyer and a seller. A buyer and a seller. The 3 options is buy, sell, or do nothing. That's our options as a trader. So we need to get back to the core. Buy or sell. Buyers, sellers. Who is in control of this market over a short period, a medium period, and a larger period? And then you've got to start to build your strategy around that. And that's what I've done. It's really important that we don't overcomplicate ourselves with all the flashing lights and this indicator does this and this one does this and oh, this one says this. The best traders I know keep it really simple. I don't even have volume on my charts. The volume is, see these spiky things here? That's volume. I don't have volume on my charts. I don't use that. They are clean, crisp charts because I need to be decisive. I'm a trader. I need to make decisions. An analyst tells you why. A trader says, I don't care why. I got out and made a profit. That's the difference. Both have their place. I'm a trader, not an analyst. People go, why did that happen? I don't know. Next question. So what type of trader are you? People often try and be something that they're not. For example, if something makes sense to you at the granular level, you'll probably be able to learn it more in depth. If you've got somebody who tells you something that they're doing phenomenally well with, but it doesn't really make sense to you, it probably won't at depth. Excuse me. So often we don't ask ourselves the right questions. And if you don't ask yourself the right questions, you'll always get the wrong answer. Because the right answer to the wrong question is still guiding you or misguiding you. So you've got to ask yourself, what sort of trader are you? Now, you might not know. You probably won't. Not to start off with, but don't be scared of making mistakes because mistakes are your best friend. Without mistakes, you can't move forward. The best traders make their mistakes and then they become fewer and fewer. So if you're going to make this many mistakes, make that many as fast as you can. But just minimize how often you make them. And then bring them down to very, very little. I made a mistake last week. What was it? It was ZRX against Bitcoin. That was an opportunity of a trade, and it was against the dollar as well. Now, the one against the dollar, I could have had leverage, and I love leverage because it's money for nothing, effectively. Now, I was tired, and I went and traded it against Bitcoin. And I wasn't disappointed to be in that trade, but I made the mistake. I wasn't sharp enough. I told you just before, if you're not feeling good, don't trade. I was feeling great. I just made a mistake. I admit to them, I talk about it on my podcast too. That's my cleansing experience. I don't claim to be amazing at everything all the time. I'm consistently good. I still make mistakes, so it's okay. Just don't make them all that often. So what sort of trader do you want to be? You don't be afraid to change. You've got 2 options. You've got intraday trading and you've got swing trading. Intraday is pretty sexy because there's lots of trades that go on and you might want to be in. It's really addictive and it's like, yeah, it feeds that little bit of gamble that's probably inside all of us. It's a baptism of fire. It's not bad though. Lots of intraday trades means lots of mistakes and lots of learning. And then the realization that maybe you shouldn't do so much intraday trading. I like to swing trade. I intraday trade too, but I trade what I call windows. So I like the 4 hour, the 2 hour, the 4 hour, the 8 hour, the 12, 16, and daily and 2 daily. All right? Why? Because I know when they close. So on a 4 hour, for example, every 4 hours, I just got to be on my computer screen. Obviously within I'm not going to get up out of bed at 4 o'clock just to check a chart. I've got to live my life too. But if I know at 12 o'clock, all these candles will close at 4 hour, and then again at 4, well, then I'll be there 15 minutes before 12, and I'll be there 15 minutes before 4. And because they're cycling on 2 to 4 hour time frames, the opportunities are going to present themselves there. So I need not sit there and stare at my charts all day. So you see what I mean? This is a 24-hour market, 7 days a week. The excuse of I don't have the time, you just lost it. My apologies. So, 2 trading styles, swing trading. Intraday, we're looking at 4 hour, 8 hour daily, that sort of thing like I just mentioned. Intraday is a low time frames. I used to trade the tick charts and the 1 and 2 minute charts and the ES and the NQ and the YM, which are the mini contracts for the S&P, the Dow and the NASDAQ. and I can trade them on these low time frames. I wouldn't touch crypto on these low time frames yet. I just want more volatility and more volume. Sorry, not volatility. There's plenty of volatility. I want more volume because I don't want slippage. Don't worry, we're not going to go on what that is. Slippage is risk. Risk is bad. We need to manage risk. There you go. So this will determine the length of time you're in a trade. A swing trade will typically be open for longer. The best trade is an intraday trade that gets a swing trade move. Really tight little entry on your risk and a massive reward. Speaking of which, actually no, I'll get there. I'll wait. So learning the right words, what the heck does this actually mean? Well, I'm talking to you, I'm making somewhat, hopefully I'm making some sense, because I'm stringing together words that create a sentence, and a sentence that creates a paragraph, all right? But if I was to say watch, computer, click of water, paper, key, I've just said a bunch of words about the length of a sentence, but it makes no sense, does it? So, the way you structure things is incredibly important. And we know that with language. We also know that with cooking, with a recipe, for example. If you want to bake a cake, well, you don't just go and throw everything into the oven and go, well, I'm just going to think of a cake and I'm going to get one. You've got to follow a recipe. Now, if you follow Gordon Ramsay's recipe for a mud cake or whatever that guy does other than swear, you're probably not going to bake it just as good as him. But I'll tell you what, you're going to get pretty damn close. And you practice and you practice and you practice and you practice and you'll be good at something, baking that cake. And that's what I've done. I've become really good at baking that cake. But I bake 3 cakes, 3 strategies. And it's the same process. It's a recipe. They need to come together. So technical analysis and trading strategy are often confused because technical analysis by itself is worthless. It's nothing. Like the floor of this building by itself, this lino stuff, if you saw that in the street, you wouldn't be impressed. But in this layout here, it's wonderful because it comes together to create something. Individual elements by themselves mean nothing. Bring them together, they're powerful. Sugar will not bake you a chocolate cake, but it's incredibly important to make a tasty one. Unless you want to go one of these wonderful vegan recipes. They've probably got some good ones these days. But my point is you've got to have it in context with how things are used. Trading strategy is having a set of rules that give you the ability to be decisive. And if you can't make decisions, you've lost your power. And if you can't make decisions, then you've lost your trading account too, because you just sit and watch all the time. This is what's really, really important. I teach this stuff. Over the years of experience, I'll tell you what, for the last 8 years, I haven't changed a single thing. It's weird, isn't it, right? Surely you want to continue to grow and learn. Yeah, I do, absolutely. I've just got other things that stimulate me to do that. With trading, it takes a while. Like, it took me a long time. I didn't have somebody to teach me early on. I tried to do it myself. And, with a wonderful entrepreneurial spirit, I thought, I'll just learn this and it'll be all good. I'll just wing it. Well, that might work in business till you get started, but it doesn't work in trading. Trust me, I lost a lot of money when I kicked off. As a 20-year-old in London, I had a little successful business in Noosa, where I'm from, and within 6 months, I'd blown £9,000, and that was when it was about 3 to 1. That hurt. That really hurt, yeah? So I get it. I understand what not to do really, really well. Bless you. The words by itself, waste of time. We just sort of covered that stuff, guys. You've got to have a structure and a strategy. Every business in the world, every coach in the world, every team in the world, anyone that achieves any form of success typically has a reason, a recipe, a strategy, and trading is no different, and neither should your approach to the markets be. The old school ways, sloping trend lines, stop using them immediately because they're subjective. Anything subjective is going to harm you. You've got to be objective. It's got to be black or white, as much as it possibly can. I used to draw sloping trend lines and then move them to fit what I wanted. I wanted to take the trade, so I'd move it. It's like having a dancing partner that you just drag around everywhere. It looks terrible, and you won't have that dance partner for long. You've got to learn to work with the markets, move with the markets, flow with the markets. Don't drag it around because it will kick you to the curb, and that will cost you a lot of money and possibly more. So you've got to work with what does work. All this overextension of RSI and all of that, Yeah, don't bother. Don't bother. Factual information, nothing is subjective in my world. It is objective. It is decision made by checklist. Why? Because the person that's talking to you right now, I have a good time. I like doing things spontaneously. I like some adventure. But that person loses money. When I go into my trading room, I'm your accountant who has a white shirt, sleeveless with a brown tie. If there's anybody in here, I apologise that's wearing that. Nothing against accountants, you're legends, I love you all. But you know what I mean? Like I had to create a different persona, a different way to approach the markets because I loved the passion, the excitement, whereas you've got to cull that. What comes natural, you need to sort of work on. So the structure brings discipline and discipline brings results. If you want consistent returns in trading, and you all do, if you're going to do it, you better have a consistent approach. Makes sense, right? This is logic I'm talking about. This is not fancy, it's just simple logic. We just go through a step-by-step process. When I stopped using sloping trend lines and stopped trying to make money, I started making money. So you've got to control what matters, you've got to learn to understand what matters. Buyers and sellers, who won? A candle will tell you who won the time that candle is available, so 4 hours, for example. Who won that 4-hour battle? A trend will tell you who's been winning over a larger period of time. These are outcomes that we're looking for based on buying and selling. I do use indicators. I use the MACD and the moving averages 10 and 20. There's no secret because there are no secrets. But I use them as leading indicators. They have to come together with a certain number of things to create an entry, stop loss, and target. Stop loss is an order you put in that would stop your losses. About as creative as my name, TraderCobb, right? Craig Cobb, TraderCobb, see how he did that? Tough crowd. Tough crowd. No, you haven't had enough beers yet. So yeah, you need to be precise. You need to be precise. Buying and hoping, good luck to you on that one. And that's fine, you can invest. I invest too. There's some investments I'll make and they'll go down and that's fine, I'll just leave them. But when my investments go crazy or things change, I'll get out of them because I'll use my trading ability to help me make my investment entry and exit points. So whether you want to be a trader or not, you should learn about this stuff. It's going to help you at some point. It might not be every single day like it is for me and people that I work with, but long term, when it comes to the crunch, you've got to know what you've got to do to get in and to get out. So a couple of things to make this nice and simple. I'll work with the mouse here. I assess trends. Now, I know everyone's going to overcomplicate this because we all do. I did. I look for uptrend. This is a higher low here to a higher high, higher low, higher high. A series of higher highs and higher lows. It's an uptrend. Now, I used to have on my laptop, when I started trading, I didn't have all the screens I've got now. I had a post-it note stuck to the side of my laptop here. And it was literally this. So I would look at that and go, oh yeah, that's that one. That's an uptrend. On the right-hand side, I had the downtrend. You can see lower highs and lower lows. And I did this to practice. And then I started drawing lines and connecting the dots. And I learnt trends so well that I can see it instantly now. It takes me about a split second and I know what trend it is. There are 3 types of trends. Uptrend, downtrend, no trend. I don't trade no trend. I trade either one of the 2 up or down. If there is no trend, there is no interest. Not from me anyway. So it doesn't need to be complicated, guys. So don't overcomplicate it, because people do, all right? Support and resistance, true support and resistance. There's a ceiling above my head and your head. If there was a trampoline here, I jumped up, I'd hit my head, I'd fall back down, I wouldn't do it again. Well, you'd hope not. Resistance is above. When price touches this same point, so if I hit my head here, and then went and hit my head over there, 2 touches, above me is resistance. Support, 2 tests below. So think of resistance as above as price runs into a point. Support is the floor on which we walk on. Support's our weight. Support and resistance are part of what I trade. These are horizontal levels. They're precise because if you draw a sloping trend line, you've got 358 degrees because you've got 360 and you've got 180, which are vertical and horizontal. Sorry, 0 and 180. So with this, it's horizontal. It's just 180. There's no room for trickery. It just is what it is. And that's what I like. There's no subjectivity around this. Real support is there, as you can see. Now, old resistance can become new support when it's retested. Not always. It doesn't mean just because it comes back and tests, it's going to be support. But again, it's another, you can see how we're layering things? We're starting to add little bits and little bits and little bits and little bits, and you start to build something. As you can see again, that resistance becomes support, and obviously on the flip side, it is true as well. Now, here's our sloping trend lines. You consider this. Look, let's go back to here. Horizontal lines. Sloping lines. Problem is, which one's right? Which one do you use? Which one do you trust? Where do you put your stop loss? How do you... Ugh. It's a bit too subjective for me, but it wasn't, because for 4 years, for 18, no, be more like 24 months, maybe a little bit more, I used them all the time, and I would tweak them. I wasn't making money then. I would break even. I'd make a bit, then I'd give it back. I'd make a bit, and I'd give it back. And I'd make a bit, and I'd give it back. Until a mentor, the one that taught me the most, to be fair, he said, look, if you keep on, and he was pretty, stern about this. He said, mate, I won't use the language. He said, mate, if you keep doing this, he was a Kiwi in London. If you keep on using these sloping trend lines, you can forget the mentorship. I thought, okay, I shall stop using these. And that was the final piece of subjectivity that exited my trading. And from there, wouldn't you know it, things improved. So trust in your mentors is probably a key aspect of that as well, because they're better than you. Really, that's why they're your mentor. You want to learn from these people, so listen. And I did, and it made a big, big difference to me. So look, I'm going to introduce you to the baby crypto cradle. It's called the baby crypto cradle because it's not the full strategy. It's a pullback that I use in a certain zone. We only use this in the direction of the trend because I only trade trend. Price pulls back into the cradle, for which I will introduce you to in just a moment. All right? Preferably, you want to have a small bullish candle if it's in an uptrend, or a small bearish candle if it's in a downtrend. Okay, bullish is a green candle. That's what bullish means. The buyers won. Bullish means buyers won. Bearish means sellers won. All right? So the red candle in a downtrend, that's what we want. The green candle in an uptrend, that's what we want. Stops to be supported by a strong level. I'll show you that in just a second. And we only risk 1% of our capital because we're here for a long time. All right, we're here to make money long term and keep it. Managing your risk is the most important thing. So you can see here, well, where the arrow is, you'll note there's a purple line on that chart, and you'll note that there is a white line on that chart. The white line is the 10-period exponential moving average. You can use simple, it doesn't matter because it's a zone, and they're so similar anyway. The purple line is a 20-period exponential moving average. Now, what is a moving average? A moving average is a moving average, wonderfully creative name, of price. So the white line is a representation of the last 10 candles. So go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, something like that. It's smoothed out. Okay? It's just the price smoothed out as a line. Keep it simple. Put a full stop on that. The 20 is the same, but 20 candles. All right? People trade when the moving averages cross. Oh, it's a dead cross. It's a golden cross. Yep. Do you know why it crossed? Because price has been moving up. That's why it crossed. So people that are buying on these moving average crossovers are using one ingredient. Now, they might get lucky and it might continue. The momentum may continue. But a cup of sugar is not a chocolate cake. One ingredient is just simply not enough. So again, it's about bringing your understanding up to speed where you actually get what's going on. As you can see that we've got a downtrend because we have that zigzag to the downside. Look, down, lower high, lower low. Is there a trend? Yes. What direction is that? Well, it's a downtrend. All right? Is the price in the cradle, that 10 and 20 period moving average, the black in the middle of that, in and around those two lines? So in and around here, that's the cradle zone. Notice how it pulled back into here. That's the cradle zone. Moved away. It's pulled back in. Small bearish candle in that zone. Is the stop in a logical place? Now, it's hard for me to explain that without leaving this microphone. And I know that people are going to be watching this recorded on the World Wide Web, so I'm going to attempt it. I don't have a drawing tool. If price was to, oh yeah, that'd be great. But then I've got to go both sides. Actually, that's not going to work, but thank you. I just realized there's two screens, not one. It's not here either. Let me try, all right? Let me try. So follow my mouse. You can all see that little mousy mouse, yeah? So if I enter as it breaks down through here, through the low of this red candle, and my stop loss goes above the high of this green candle. Price does this, and then goes. What I will have is a higher low here. And then, as it breaks this level, I'll have a higher high. A higher low, if you recall, and a higher high equals an uptrend. So, do I want to be short, trying to make money when the market falls when we have an uptrend? No. So that's the point at which my trade is invalidated. Logical stop loss placement based on fact. That's what we do. So we're not just trying to pick a number. We've got a real reason. And now you can see how we can have consistency now. We can start to bring these things together. Now let's show you the trade. Yep, it went well, of course. I'm not going to show you bad outcomes. There are also losing trades. They do exist, and I have plenty of them. Multiple targets are reached on this example. Now here's that trade I talked about before on Bitcoin. Again, we've got an uptrend. Moving averages are in the correct order. That's something we haven't touched on, but I haven't got that much time. You'll note we have a higher low here, a higher high here, and we pulled back into that cradle zone. We have a small bullish candle in that zone. Now, these are just the basics of this strategy. There's, I believe, 8 essentials and 9 bonus factors. You must have 8 rules ticked off before you even go to the bonus factors to increase your probability further, or to help you pick between maybe 8 trades in a morning. Well, which ones do I want to go? Use the bonus factors. That way, again, there's consistency of your approach. So we have essentials and bonus factors. This particular outcome, is there a trend? Yes, it's up. Direction of trend? Well, I just said it. Yep, we're in the cradle zone. Is there a small, that's a typo, that should say bullish, my apologies. And is a stop in a logical place? Once again, if the price was to break through the high of that candle, because the stop will go below the low, comes to here, and then stop me out. We'll go from higher highs and higher lows to lower highs and lower lows. At that point, I don't want to be in that trade because we're no longer in an uptrend. All right? There's the outcome, and that continued to go up to nearly 20,000 US dollars. That was a good one. A couple of examples to show you the volatility before we wrap, guys. This was a trade this year during a bear market that has been most of the year. There's still been amazing opportunities. And as a matter of fact, I think that right now, whether you invest or you trade, it's a really good time to be looking at the markets because you don't want to be buying the hype. You want to be buying when it's quiet. You want to accumulate positions when prices are relatively fair. Now, I don't know what's relatively fair in the crypto space. I'm not going to pretend I do. But based on my technical analysis, we're on the monthly in the cradle zone. Just going sideways. If investing and trading are different, we can make money either way. This is EOS against Bitcoin, a top 10 token against a top 10 token. Now you'll see, you can see the essentials here. This is somebody who's one of my apprentices. They've created this little thing here where they tick in green. You can see that all the essential factors are met, and there's 3 bonus factors that matter also. The entry, the stop, and the first target, because we scale out at 1-to-1. I'll introduce you to that theory in a second. And there you go, there's a trade. And there's our outcome. It kind of dwarfs it. Look at that. That was the trade there. This candle is this candle back here. Now, if we do the math on this, let's just cut to the chase here. The trade risk, so the distance between my entry and my stop loss, that's your trade risk. Because you enter here, your stop loss is here. That is the distance of your risk. Then you've got to calculate how much money that equates to. In this example, we're using $1,000. So I'm risking $1,000. The trade goes against me, I lose $1,000. That's the way it goes. Now, once we take the realistic exit, so I've not gone, yep, we got out at the top, because we didn't. See this? Pull back, higher low, lower high, lower low, out. See that? There's that lower high, there's a lower low, broke that level, got out. I'm not telling you I got out here because I didn't. It's pretty straightforward, all right? Pretty straightforward. Now, in that space, in that move, there was 12,500 Satoshis, we call that. It's like a pip, or a tick or a cent or whatever you want to call it, right? It's just the numeration of crypto. Now you divide your 518 by that number, sorry, 12,000, whatever it is, divided by 518, the return on your risk is 24 times. Now I'm going to tell you the truth again. I didn't make 25 times on that because I scaled out at 1-to-1. That means at $1,000 risk, I have two orders. One has a limit order of $500 move. So whatever the risk on the trade is plus costs on top. Hit that target in the very first day. Now I've got $500 risked in the market still. I've got $500 in profit. If everything goes pear-shaped, my return is zero. So manage risk first and foremost, right? You're not going to hit a home run every time. So don't try and plan for that. In some markets you can change, but that comes with a bit of experience. Even with that being the case, minimising our risk, managing our risk, it's still 12 times return on your risk. But here's the best part, that 3 weeks. You get this in stocks, you just got to wait a full cycle. This is why it's so exciting. This is why it's so popular. This is why I am here and drop literally everything else and focus on this space entirely. Now, the same pair, interestingly enough, a couple of days or about a week later, so see how it popped, bang, 1-to-1 straight away, then it pulled back. I'm like, okay, well, there's no risk on this. Another trade came about, so there's no risk there. I'll trade it again. I wouldn't double up if I had risk on, but this isn't doubling up. It's a different trade that stands on its own 2 feet. The other trade's got no risk, so sure, let's go again. This one was better. I got my target hit for my first target within 2 days. It doesn't always work like that. And this time we got a risk multiple of nearly 30-to-1. Scaling out, it's still 15 times risk on this. That's $15,000 for a risk of 1,000. So do 100 to 1,500. You don't need a lot to get started here, guys. But you got to get started. That's the bit that's up to you. So if you have a look at both of these trades, that's 2 trades showing in one market, total gain of 28,000, risking 1,000. Again, just drop it to 110, whatever it is. You do the multiple of whatever you're going to trade. It doesn't matter. It's the reward to the risk ratio that has me here. Probably has you sitting in the audience as well. The volatility is insane. You've just got to know how to work with it. Here's another one on Bitcoin. Entry, stop, trade risk 276. Calculation, this one is not quite as spectacular. I ended up getting about 5-to-1 out of this in the end. No, 5,000. No, because this trade was left, as you can see here, look at trade the stop, lower high, lower high. It wasn't exited yet because the stop loss is at this point, so these numbers are calculated upon this point here. Again, a nice little move. They're not all massive moves, so don't expect that everything's going to be, going skyward every single time at that sort of multiple. It happens frequently, but not always. Another little Bitcoin breakout trade, which I haven't introduced you to tonight. I've got 3 trading strategies because markets go up and they go sideways, they also go down. But they move in 3 types of ways. They'll break out, they'll move, pull back, pause, and continue, that's the cradle. Or they'll move fast and you'll get the pullback and bounce, and that's how I use Fibonacci. So there's 3 ways the markets generally move. This is the consolidation breakout. You can see here, that one went pretty well too. 17 times risk multiple, scaled out, still 9-to-1. Over, that's a 1-hour chart, that was a few days. 4 trades, all good examples. Here's the thing though, right? Even with scaling out and managing your risk like a very intelligent person should, I'm not even talking about the maximum amount we could have made here, I'm talking about the reward whilst managing risk. It's 40 times the risk in this case, right? Now, here's the thing. Trading's not easy. Should be simple, but it's not going to be easy. So you want everything in your favor. I've watched people in the community that I run basically, become full-time traders in under 6 months. Now, whether that was a good decision or not, I'll let them be the judge of that. But they made enough money to do that. You know why? Because even in these trades, there'll be a lot of losing trades, but not 40. The volatility makes us look better than what we probably are, but I'll take it. So imagine going into these markets knowing what you're doing and getting these types of returns consistently. It's awesome, but it does take work. It does take focus. It's not a get-rich-quick thing, but it's there for you if you want it. In this particular example, 40 grand, yay, but it's more about the reward to risk. It's not about the money at this point. I could have put another zero on that if I really wanted to. It really doesn't matter. $1,000 is just a nice round number in the middle somewhere, right? 40 times your risk multiple, short space of time. But what do you got to do? You've got to focus on flawless execution, because without it, you will get nowhere but the bottom. You need a strategy that makes sense to you. If these make sense to you, go and look at more of what I do. And if you want to, do go further. It's up to you. I don't mind. I'll give you an outlet to learn if you wish to. You don't have to. This is not a sales pitch. Make sure you've got written down rules. I talk to traders and go, can you write your rules down? They go, oh, no, it's in my head. Well, you don't have a strategy. You're not going to be consistent. There's too many variables to consider. You want consistent returns, you've got to start with a consistent approach. All right? Every time you take a trade, do the stuff that's really boring. Take screenshots like I just showed you then. I got records of my trades. Why? Because when the trade's closed, I want to go back and look at my checklist and go, did I read that right? Now, I don't get as much from that these days. I still do it. I don't get as much from it these days because I've been doing it for a very long time. But it's a free tool. It's you assessing yourself with a checklist. It's the most powerful learning tool you've got. Use it. It's not fun. It's real boring. It's work you've got to do. But just like in our businesses, we need to have accountants, or we need to do it ourselves, it's a crucial part of the business. You keep your receipts, right? These are your receipts. You can learn a hell of a lot more from this than you can from your receipts, though. All right? Review your trades at the end. I wouldn't say daily unless you're an intraday trader. More I used to do it all the time, end of the week, month and quarter. These markets are 24/7 now, so it happens when it happens, because it keeps moving, and some trades are open, some aren't. I like to do it when the books are closed a bit more. Months are usually pretty good on that. And seek out mentors. If you know people, get them. If you've got people, it doesn't need to be me. If you've got people that are successful and you've got access to them, don't spend a dime, just go and get them. But you're going to need to have a strategy, and you're going to need to focus on flawlessly executing that strategy every single time, because that's how you exercise an edge. So guys, I have got this here. I wasn't planning on doing anything, but if you do want to go further, then that's the code ACS15. You'll probably remember that in your head. Go to TraderCobb.com to check out more. Thanks for your time, and I hope I didn't waffle on too much and I made some sense to you guys. Cheers. Thank you. And I think Q&A, is that right?
Yep, Q&A now.
Yeah, mate.
Yeah. Hi, Craig. Interesting talk. What I found really interesting was the way you were describing the rules, and I think you said at the end, you write the rules down. If you can write the rules down, that's one step to a program. Have you actually thought of trying to program this, or is there some kind of human skill that you need to make it work?
The answer is no and yes. We've got people coding right now. We are very much on top of that. The problem that we had in foreign exchange, or not the problem that we had, the problem that I've had in the past is that the people that were writing the code weren't good enough. We don't have that problem anymore. Yeah. So yes is the answer. Yeah.
In a market that's so easily manipulatable, like, crypto is kind of the Wild West of the modern era, how do your charts and, having everything defined so well work? Like, do you find anomalies all the time?
Look, manipulation is a conversation that's kicked around for quite some time in the crypto market, and it's one that is there. I mean, all markets are manipulated, whether we admit it or we don't. It's another story. Crypto is much more easier to manipulate because it's smaller. Yeah, it's because the market cap is smaller, it is easy to manipulate. But look, it's one of those things that you can put as much weight or time into that as you like. I haven't had any really adverse outcomes based on anything like that. I try and stick to the higher market cap tokens. So slippage is where, so to describe that, if my entry is here and my stop's here and there's an illiquid market, I might not get filled until down here, which means it's doubled, tripled, quadrupled my risk. If I'm trading a liquid market, and I teach that by a smooth flowing trend, smooth, clean, smooth, clean, flowing trend. So not gappy. It's a visual representation of volume on a chart. So if you avoid those sorts of things, and that's what I do, in any market I've avoided gappy charts, I haven't had any adverse reactions just yet in this space, but manipulation's there for sure, I agree with you. Just avoid the little tiny market caps. Oh, where are we going? Sorry, I'll come this way next time. I keep looking the wrong way.
Back to question one, how about AI and machine learning instead of people?
Oh, mate, let's do it. I mean, you tell me how to optimize my strategies, let's write checks all day, I don't mind. I think that, well, it's definitely coming to the markets. It's a developing space. I'm watching that, as I said before, at the beginning about the human emotion, Jesse Livermore comment about human emotion and the patterns. I think AI will change the way markets move. I haven't seen any evidence of that yet. If you consider all the trading bots that are out there now, people say, well, what about the bots? Again, it's another thing that until it does, it doesn't. It doesn't affect my life. Nothing's changed. My trading results are consistent. It's not been an issue. And like I said, by the time AI runs the world, I'll be on a boat somewhere. But it will come. It is there. And optimizing of trading is a wonderful way of incorporating that for sure. I just don't know how to do that because that's well outside of my pay grade. This side. Yeah.
Okay, so you talked about charting software. What do you use?
TradingView. So unfortunately in crypto we don't have access. And look, TradingView is free. TradingView.com. I've got no affiliation, but if you're going to have a look, you may as well.
Real time?
Yeah, real time. Real time.
It's free.
It's real time and it's free.
Just make a note.
Yeah, no, and it will plug into all the different exchanges too. So you get Binance, Bittrex, Bitfinex, BitMEX, the longs and shorts. You can also get stocks, all your stocks that you want to trade, foreign exchange, commodities, bonds. It covers everything. I'm used to a program called eSignal or TradeStation, and I can have that spread across multiple screens. I mean, it's an institutional grade platform to trade from. That's my foreign exchange, and when I was trading that more often. So for me, I look at TradingView and go, what a clunky piece of, you know. But if you're not used to what I'm used to, it's brilliant. It really is. TradingView.com. Simple, free, easy to use.
Right, thanks.
No worries.
Okay, what stock should I buy next?
Next question. You said stocks. I don't do that anymore. You do the research. No, I don't do tips. Focus on the top 10 and read those. That's a good start. You get to read what's actually going on. You know, don't get too, you know, just remember this. When somebody is saying, you need to do this, but you need to buy this, you need to do this, and you need to buy this, and this is why this is so good, they're either invested themselves, so they're preaching to themselves while they're preaching to you, and they want you to believe because it makes them feel better about their investment, or they're trying to sell you something. Yeah, so you really got to do the research yourself, and I avoid the noise. I don't care what anybody says. It might sound arrogant, but I just don't care. There's only one person on this planet that makes my decisions, and that's me. And I'm not going to rely on anybody else to make that decision. Therefore, if I stuff up, when I stuff up, because I do stuff up, it's on me, and I can own that, and I can learn from that. If it's about, people go, oh, it's the broker's fault, or it's that person's fault, you'll never actually get anywhere because you keep pointing the finger when it's always pointing back at you. The sooner you realise that, the sooner you can actually learn. So there you go. That was a long-winded answer. Yeah.
I might go for one more since nobody else is. So one of the issues that Bitcoin has, or had, I'm not sure if it still has, is latency. That you can actually say, I'm making a trade, but of course it's not actually locked in until such time as the blockchain is updated. Now they say that it's 10 minutes, but in reality that's a variable figure. So when you're dealing in these 1 hour, 2 hour blocks, is latency a problem?
Yeah, good question. And the answer is no, because I'm trading on platforms that are trading like a CFD or a contract for difference. It's a derivative written on the underlying. So I'll move my crypto into that wallet address of that platform, that exchange, which is like a brokerage platform in normal speak, and I'll use their software to trade. So I'm on them and their derivative on price as opposed to going into the blockchain. Now, if I'm to trade something like Stellar Lumens against Bitcoin, as an example. Yes, I'm actually buying it with zero leverage. The buying and selling, not a problem. The latency, not an issue. It just takes a little while when you send it, not when you buy and sell it. Yeah. Linda?
Yeah, actually, I just curious.
A curious question.
Yeah, curious question. Yeah, I just curious about what kind of principle are you apply in terms to get kind of exact entry, exact stop, and exact target.
Yeah, it's based around the strategy, really. I mean, there's something that I say, and I've got it stuck. I've literally got this stuck to my wall. Okay, there's two things: trade what you see, not what you think, and stop thinking. Because when I think, it's a mistake that I've made, and I've made it before, and I'll make it again, I'm sure. My job is not to think, my job is to execute. So I rely entirely on my strategies and my ability to spot those strategies and make the right decisions at that time. So it's literally, my entry is down to my strategy, my stop is down to the strategy, my targets are down to the market and the conditions that we're in. Sometimes, like at the moment, I'm looking for smaller targets because we're just not in a running market. In, out, done, in, out, done. Sure, you're not going to make the big gains right now, but it's not about always doing that. It's about making money consistently. When the big gains come, the big gains come. I'll trade differently. Not that the strategies will remain the same, but the way I target will differ. So it's all down to the strategy, and when I think, I make mistakes. All strategy.
You mentioned about technical analysts explain the why, but you're not interested in the why because you're a trader. Is that because the why is after the fact? And wouldn't the why help you in the future or not?
It's a great question about the why in trading. The why is after the fact, yeah. So the why for me, it won't affect the future again either. I don't really care. Like, it sounds really simple because it is. I literally put everything on the charts and risk management. Why something happened, like Bitcoin Cash went up 32% this week. It's probably up a little bit more at the moment because it had a little bit more of a shot before. It's come off a little bit today. But I look at that and I go, everyone's telling me, like, I did an interview on Tuesday. Oh, what do you think of this, and this? I don't, was my answer. And they're like, you're pretty crap to interview. The fact is, the God honest truth is, I just don't really care about the why. I'd never have. In foreign exchange trading, for example, I know when the non-farm payrolls are coming out. I just won't trade around it. You know, if you've got 6,000 analysts all around the world, with half of them get it wrong and half of them get it right, and they're paid $500,000 a year minimum, what chance have I got? Just ignore it, leave it alone. So yeah, the why really doesn't affect anything that I do at all. But it's a good question.
Thank you.
You're welcome. If there are no more questions, I'll throw it back to you, Catherine. Thanks, guys.